Fergus Hicks, you are real estate market strategist at UBS Asset Management. Thank you for joining us on BiTV.
Hi, Luc Etienne. It's good to speak to you today.
The pleasure is ours. In the opening of UBS Asset Management's mid-year panorama outlook report, which is titled Inflation Rising to the Challenge, UBS Asset Management, your colleague Barry Gill, head of investment at the UBS Asset Management, stated that the alternatives clearly have a role to play as a portfolio diversifier, given both equity and bond beta is in retreat. How does real estate compare to other alternative subsectors in this respect?
Sure. Well, we think it is a challenging investment environment at the moment, given inflation is at multi-decade highs. And we are expecting economic growth to slow as central banks aggressively raise interest rates to combat inflation, and also due to the cost of living crisis and energy price rises. Now, per Barry's comments, we do think that alternatives in real estate offer portfolio diversifiers for investors. And we see real estate as sitting in between equities and bonds in terms of returns and volatility, and also having relatively low correlations with them. And then unlisted real estate is also less volatile than listed real estate. So overall, this gives the opportunity for diversification benefits for investors from going into real estate. And in the current environment, we think these are attractive attributes for investors.
Thank you. Looking back at past period of high inflation, how do you foresee the current inflation affecting the property market by the end of the year?
Yeah, well, I think all situations are different, and we currently face a unique set of circumstances. If we look at evidence from the US in the late 1970s and early 1980s stagflationary periods, it suggests that real estate outperformed equities and bonds. However, real estate performance during that time was slightly weaker than during more balanced economic conditions when the economy was growing around trend and inflation was contained. We do think that real estate has some inherent characteristics which support it in the current high inflation environment. Specifically, that many leases have some link to inflation, which allows for rents to be uplifted to reflect high inflation and protect the real income of investors. And also short leases, which allow rents to be re-geared to reflect high inflation. So overall, at the moment, we are seeing the market adjust to higher interest rates and a weaker economic outlook, and this is feeding through to some repricing, but we think the asset class is well positioned in the high inflation environment we find ourselves.
Okay, and maybe more specifically, what consequences could the current economic context have on Europe's real estate sector, do you think?
Sure. I mean, in Europe, recession risk is increasing due to the energy crisis and the sharp rises in energy prices, which we've seen due to the war in Ukraine. And we are seeing some repricing in the real estate market, particularly in the logistics sector. So if the economy does enter recession, it has the potential to weaken occupier demand and weigh on rents. So the outlook for Europe, the European market, is really very much dependent upon what happens in energy markets in the economy and the extent of the slowdown we see over the next year or so.
Okay, thank you very much, Fergus Hicks, for this insight. I believe, like you, will be following this situation more closely all during the fall. Thank you very much for your time again, and thank you all for joining us. And see you soon on BiTV.
Great, thanks very much.